Business Authority.
Welcome back to Yorba Radio, also streaming to you live on yorbamedia.com. I'm your host, Michael Yorba. Thanks for joining us. All right, my guest this segment is Nick Santiago, President and CEO of InTheMoneyStocks.com. Nick, thanks for showing up and being on the show with us.
Thank you for having me, Michael.
Oh, anytime. I really appreciate you being on the show. All right, let's talk about that S&P, what you see coming up for next week.
All righty. Well, if you look at the S&P 500 daily chart, you'll notice that we bounced off of a critical trend line a couple of days ago when the markets reopened. I guess it was on September 6th. That level held, so we now have a second higher low from the August 9th pivot. That tells us the market has possibly a little bit more upside left. However, if we go down to that pivot low on a closing basis, it probably is lights out for this market, and we're going to resume the downside trend right now.
Okay, let's get into cyclical analysis. I had a cycle top due yesterday and today, actually, and I don't have anything coming up for this until somewhere, I think it's about the 15th or 16th. But I want to hear your cycles, how you're playing this, where it is now.
Okay, how I am right now, this is two ways I'm looking at it. Right now, if you're in any long trades, you can hold on. But if we break below that 1150 level on the cash S&P 500, you should exit all positions and get ready for further downside. In the meantime, we're going to have the 9/11 anniversary coming up this weekend, which will probably take effect in the markets on Monday. And then you're going to have the Lehman Brothers bankruptcy anniversary also come into play on the 15th. The thing about this week, though, that's very important for traders to note is these anniversary dates are usually very key. The only thing is it's going to be options expiration week. So options expiration is going to be on September 16th. You'll get a lot of institutional game playing that week. So I'd be careful. I'm not sure if we're going to break down right this week, but if we get a flat week going into by next Friday, watch out. This market's probably going to have some heavy downside come middle of September.
Okay. All right. Give me, and this is a little out of the box for us, but give me an upside if it breaks up and a downside if it breaks down. You got to be thinking about that, the parameters there.
Absolutely. Right now, you're looking at the 1250 level if it does break up. I think that's the 50 moving average. It's also the 618 retrace level. If you take the last significant pivot, which was on July 21st to the August 9th bottom.
Got it.
And then if it goes a little higher, maybe 1280, but that would be max move 1280.
Okay, so I've got that part. The downside now.
Downside, I think we're going to be headed to the 2010 July lows.
Okay.
That's taking us basically all the way down to the 1,000 level on the S&P.
Okay, got it. And using your cyclical analysis tools, do you see that coming in a very rapid pace, or do you think that's an October type of event?
Well, historically, September and October are both very turbulent months. I think that if we do break that 1150 level on the S&P this time, and granted, we will have a technical breakdown right there. We won't even have to wait for the August 9th lows. I think the market will just start to sell, and it will just build upon itself. So
similar to a flash crash at a real quick move?
Well, similar to what we saw in 2008, basically. You know how the market's just cascaded on itself. So I think that's very, very possible right now. Got to remember that when we get these crashes or these breakdowns, they don't happen at extreme highs. Extreme highs are where the markets go back and test. They happen when we're down here churning and putting in some sort of choppy consolidation. This is where, you have to be alert for these big technical breakdowns to occur.
Got it. The bigger players are running all the stop, make a big move. Got it.
Always.
All right, let's talk about copper. You'd mentioned that before. Let's go back to that and tell me what you think.
Well, right now I'm watching copper very closely because this is one area I think that traders will be looking, at least I will be looking to short. I know we spoke about it the last time I was on your program. And if you look at the weekly chart, it looks like it is starting to set up, and we are very, very close. I think within a week or two, and then we're going to see a copper breakdown. The legendary Jesse Livermore used to say, follow copper. That's the leader of the markets, and I believe right now copper is setting up on the weekly chart. We're very close to a breakdown.
Okay, and when we do, should we hit the breakdown? Obviously, was it $3.80 or something of that? 381.
Around 381 and then 360.
Okay, that was
and
just
ultimately 345.
Okay, and then 345. No, why do you say 345? I mean, I get the 360, I get the 381, but the 345 is like right in the middle of everything. Why do you pick that number?
The reason why how I get the 345 is if you take the pivot low from June 7th, 2010, you're going to notice that significant low, and you take the recent high from February 7th, 2011. Notice those were both on a 7th of the month. That is a 618 retrace, which will be $3.45.
Oh, good. I'm glad we got to bring that out.
Sure.
Okay. Now, let's get back into the S&P just for a little bit. You'd mentioned that, you've got some leadership in stocks to watch for the S&P. Is that what you're watching there?
Yeah. Right now, what I've been telling my traders to do is to follow J.P. Morgan. J.P. Morgan is the leading bank stock in the United States right now. It's probably the leading bank stock in the world. And if you look at this chart, I mean, it is so close to breaking down again. All you have to do, and you don't even have to look at anything else right now. You could just look at J.P. Morgan. The stock was down $1.31 today, and you had the markets down 119 points. So this stock is a leading indicator. It actually was breaking down earlier than the market. You could see the breakdown occurred even this morning, right around 11 o'clock. That was telling you that this market wanted to sell off, and it's just been very, very effective. So hopefully your listeners will start watching J.P. Morgan a little closer and take advantage of it, because it's been a very, very good leading stock, and I call it the stock market barometer right now.
Okay, I'm looking at it right now on a longer term, say a weekly chart, and back there, let's see here, July of, 2009, you got a little support lower than where it is now, but the key to me, and I want you to help me with this, the key to me is that low that happened, 2-3 days ago?
Yeah, that's going to be significant. We break through that low, you probably you'll go back and test that low that you mentioned in 2009. But ultimately, this stock probably heads to around $30, and then could even go lower. It really depends on if the market breaks, but this will lead. It has led really the markets. If you look at J.P. Morgan, it topped out in February as well. The stock put a secondary high in April, and that was one of the things I was using to alert my subscribers to get short in May. Right on May 2nd, we were actually already short on the date using cycle analysis. So.
Are you looking at J.P. Morgan as, something bad is going to happen to the entire banking industry? Is that type of a leading index also?
Absolutely. Absolutely.
So
I mean, we already see the financial crisis in Europe. There's a big financial crisis here. I mean, Warren Buffett stepped in and bought some Bank of America preferred stock. He doesn't do that if we're not in trouble. So remember, he did the same kind of deal with Goldman, and he was underwater by nearly 100 points in no time at all. So this is serious business. This market's in trouble.
Okay. The U.S. dollar, before we close out, we got a couple of minutes.
U.S. dollar is very close to a breakout. Very close. We're probably, if you're looking at the U.S. dollar index futures today, a close above on a weekly chart basis, above 76.55, breakout. It's on.
Okay, and it's on to where?
Probably $80.
Ooh, okay. That's a nice trade.
That's a good trade. And, you should take off some half at 78 and lock in some gains and then let it run. But, it's not going to go straight up, but we're looking at a move to about $80.
Okay, all right, and that's we can get into the implications of that next time. But before we get out of here, tell me about the webinar that people can come and watch you trade.
Sure, we're going to have a training webinar. It's about a 6-7 hour event on September 24th. That's on a Saturday from 1 p.m. to about 7 p.m. at night. It's a trading boot camp. Please, if you want to join up, there's plenty of room right now, but seats will fill up fast. You could learn virtually over your computer. Also, come to our website. We have a brand new website, a new social side built on that website, and you try it out, give it a test drive. We have a 7-day free trial for everybody.
Great. And web address and phone number?
Web address is inthemoneystocks.com, and the telephone number is, let me get that for you quickly, Michael. We always run into this situation.
That's all right.
Okay. Telephone number is area code 212-380-1578.
Nick, thanks for coming on. I can't wait till you show up again next week.
Thank you, Michael, for having me. Have a great day.
You too. All right, Nick Santiago, President, CEO of In the Money Stocks.